Of course, I screwed it up because when I was trading it live, I would take profit too early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So in the last episode, we talked about a little bit about creativity when developing trading strategies. What are some ways that you found to, start getting new ideas for trading strategies and just getting creative with things that maybe aren't out there or you haven't found?
There's some really cool tests in psychology where they say can you come up with 30 things that you can do with a paperclip or, things like that. And there was a book, I can put it in the show notes for people that are interested, called Thinker Toys. And it's about this guy who kind of like consults with companies and tries to help people to learn to think out of the box and stuff like that. I think his heyday was in the 90s. I don't know if he's around anymore, but one of the things I took away from that was taking something that everybody sees in one way and then using it in a different way, right? So like paper clips, like when I was a kid, I could open a pair of handcuffs with a paper clip, right? My stepdad, he was like a volunteer police officer. So I had not only, when I was a kid, I was a magician, and so I did like escape tricks and stuff like that. Jump off the roof into the pool with some handcuffs and try to get out in the deep end. Hopefully, get out of that, and then, I thought I was Houdini. And then when he started volunteering on the weekends as a cop, I was like, sweet, now I've got real handcuffs. You know what I mean? I don't have like the toy ones. So I learned all these different ways to do that. And I think in trading, you can do the same thing where you go, okay, what is a moving average? All right, a moving average is used by most people to determine the direction of the trend or the market, right? Okay, what are other ways you can use moving average? Oh, you could use it as support and resistance. You could use it as an exit tool. You could use it as an entry tool, right? You could use it lots of different ways. And so that's one thing to think about is what does everyone use? Like the biggest mind blower for me was this was back in 2003, I learned the Stochastic Pop.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Stochastic Pop, I will put the link in the show notes, from a book called The Complete Trader, but he spelled complete weird as Pleat, complete trader. I don't know if that's like an oldie. Yeah. Anyway, the guy was interesting because he was like, when we were trading stochastics, we would wait till it to go over 80 and sell and wait for it to get back down under 20 and buy, right? Or get under 20 and then go back up over 20, right? And then buy, or go over 80 and then come back down below 80 and then sell. Or 30, 70, it depends on, whatever, people have different levels. But he was saying, Jake Bernstein, that's right, Jake Bernstein. He was saying when it got up to 80, buy. Mm-hmm. And I was like, mind blower, you know what I mean? I was like, wow, because I was like contrarian by nature, and I was like, ooh, that's interesting. And so I started testing. I'm like, holy crap, it actually worked. His point was that usually when the market got over 80, that wasn't the end of the move. There was still a bit of a pop there. Mm-hmm. And so you're trying to get that little move higher, right? And sometimes, of course, it would keep trending, but usually you just got a nice big move up there. So you weren't buying when it went over 80 and crossing back down. You would actually just wait till it got over 80 and then you were buying. And the same thing when it got...
small profit target, right, if I remember?
Yeah, it was pretty quick. Yeah, it was a quick thing, yeah. And so, of course, I screwed it up because when I was trading it live, I would take profit too early. And then I was beating myself up going, what am I doing? And every time I go, oh, look, it was perfect if I just stuck to the rules, So I was still learning, not to take profits early, which is something really hard to learn, I think, when you first start. So that's what I would encourage you to do. Take the tools that everyone else is using and use them in a different way. Like use that hammer to eat ice cream, right? Use that moving average to do something that no one else is doing. Use that stochastic in a different way. Here's another one that I learned. point and figure charts, like a point and figure chart is like it has an X if it goes up 50 pips. If it doesn't go up more than 50 pips, or whatever the number for the box is, it could be 100 pips, 20 pips, whatever. Mm-hmm. But I used to hand draw these euro and pound charts on point and figure. And you know what I did with it? I made moving averages on the point and figure chart. And you could use moving average crosses on the point and figure chart. Totally different to what anyone else is doing, and actually a really good way of seeing the trend. And you don't get these little whipsaws that you get on normal price charts, which are normal like time-based candles instead of movement-based candles, which is what point and figure are. So I would just encourage you to look at things in a different way. Take a tool that a lot of people use and decide, hey, I'm going to use this in another way. How else could I use this in a way that I've never heard before, and does it work? That's a really cool way, I think. What do you think?
Yeah, no, I agree. I think like you said, I'm kind of contrarian by nature. So I'm going to figure out, okay, what is the opposite of what's going on here? And does that work? And I think you can also draw some inspiration from other areas, like maybe architecture or design or hip hop or whatever it is, and kind of figure out what those successful people did differently and how they were going against the grain. And you can kind of like figure a different way to do that in trading. That sounds kind of weird, but I think it just gives you more creativity when you do that.
Yeah, I think you're right. I think, like, I've always thought that looking into harmonics, I feel like there's something in the market charts that maps onto harmonics. I haven't figured out what it is, or like, you can get into like sacred geometry and stuff. There's actually quite a few books on that stuff. But yeah, I do think there are some elements that you could take from other fields, like even physics or whatever, applied the right way could possibly give you an edge. So, and it could just be our minds just looking for connections too. Like that could be it too. But who cares if it works, right? If it works, you know what I mean? Yeah. So
what do you think of this idea that if enough people know the trading strategy, it loses its edge?
Yeah, I understand why people are saying that. And I suppose if everyone was using the same robot, that would be the case. The problem is if I give you my rules to my kangaroo tail strategy and I give them to you, and then we give them to 500 people, and then we say, okay, now go and trade that. And we all trade the same pairs, the yen, the pound, the euro, the Aussie, the Kiwi, the CAD. We come back a year later and we look at our chart, our trades. We have different trades, man. In fact, some of us are going to throw it away 6 months into the year, 3 months into the year, and the others are going to say, this is amazing. And so that to me is the real thing about the markets, is we're looking at it through our own filter, and what I think is a great kangaroo tail, someone else is going to go, no way would I ever take that, and vice versa. So, and this was really driven home to me by a book by Daryl Guppy, who's a trader. And I read this, back in 2005 or 2004. His books are kind of hard to read, but he was talking about moving averages and how, he would look at the market this way. And he would say, you would look at this change in the moving average, and that would suggest that the market's going to go this way. He said, but like, if I tell you this, it doesn't matter, because everyone else is going to have their own way of seeing it. And it's so true. It is so true. Like I get questions from traders on our Sunday night webinar, right, that we do. And they're like, what about this kangaroo tail? And they'll tell me the chart, they'll tell me the time frame, and I'll look at it and I'll go, which one, where? Like, I don't see it. Like, you know what I mean? It should be like to me, it would be like an obvious kangaroo tail. If it was, I'd say, no, I don't think, for me, this isn't really because of this, and that. You know what I mean? And so, it never fails. Like, it's so obvious. So I think it is possible. What you're saying is true. If we all have the same software, the problem is we all have different software in our head, and we all seeing it through our own filter. So I don't think, as long as we're still discretionary traders, I just think we're all trading something different, even if we have the same rules. It's crazy. I mean, it's crazy. Like, and it's crazy how people modify it. Like, if you give someone your rules, Hugh, and you say, okay, this is what works, this is what I do, these are my data, this is blah, blah, blah. You give it to someone, I swear to you, you come back a year later, they're going to have slightly different rules, because they're going to say something like, well, Hugh, what I noticed was when this happens, then I have to do this, and that's why I've added this rule, and I've modified it. And that's cool. I think that's good, because that's good for them. They shouldn't follow exactly what I tell them. They should use their own beliefs in building it. So, but I just don't believe this idea that if everyone, if enough people have the rules, that it stops working, because I just don't think we're all doing the same thing, even if we all have the same rules, which is crazy to say. But
I agree. Yeah. And especially, you have to think about, like, the retail market is so small in most markets, options, futures, whatever, that I don't think you could really move the market. I think the only way that you would really move a market, like you said, is with an automated system traded by some sort of bank or something, or some sort of hedge fund that has like huge volume, right? And I think that's the only way that a system could like play itself out, maybe.
Yes. Yeah. It's difficult to imagine a situation in our life, like where we are right now, where that's possible. Now, what people will sometimes do is they'll point to like the turtle rules and they go, see, it didn't work, from 1998 to 2006. It stopped working. That's because everyone read the market wizards. Everyone started trading the turtle rules, and I don't think that's really true. I think it's just a case of the system went through a terrible stretch, or whatever.
Long drawdowns, so you got to be able to.
Yeah, totally, man. And even if you talk to some of the turtles, they'll tell you that they're trading different rules now.
Mm-hmm.
They're still trend following, many of them, but they're not trading the same original rules. They've modified them, which is good. That's the whole point of, I think, of trading. So so it's a tricky one because I understand, and this is, it's kind of like the idea of brokers out to get you. It's this idea of, systems stop working because everyone's, don't share it. Everyone's going to get it and then it'll ruin it. And the brokers are going to, ruin your account. And, there's a lot of these things that we get as traders that we hear about. So just part of the landscape, I guess.
Yeah. Cool. Great insights. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.